Traders, what's going on? A lot of you guys have problems finding profit targets. Okay, there's a lot of methodologies out there that can help you find profit targets, but what I think the best one is already in your trading platform, and that's Fibonacci extensions. I use Fibonacci extensions for really almost all of my trades, unless it's just not adding up in my actual setup, but usually it is. Okay, when you look at the chart, almost all movement just is bouncing off some Fibonacci extension somewhere or some Fibonacci retracement. But it's just hard to find where that bounce is going to be on that retracement level, and it's hard to find where that sell-off is going to be when you're actually in your trade. Like, you don't know where you're going to actually be able to take your profits. But I'm going to help you go into that real quick, and I just want you to bear with me. I'm not going to talk too much about retracements. Find retracement videos, maybe other places. I might make one later on. But Fibonacci extensions is what's what people are having a problem with. I'll give you some rules for retracements though. Don't go against the trend when you're having a retracement, and when you're on a smaller time frame, don't worry about the most important levels, the 50 and the 61 and the 38.2. Worry about the levels that have the most confluence on them, because that's what matters on small time frames. Where on all these key levels that I'm looking at right now, when you pop up that Fibonacci retracement, where's my strongest confluence at? That's where I'm going to take my trade. That's where I'm going to enter into the market. Obviously, when you're dealing with retracements, your stops are going to be right underneath that level that you entered into at. So if you're in the 50%, if you entered into the 50% line, your stops are going to be right underneath the 61.8. Okay, so that's trading. That's basics for when it comes to extensions. So I drew here. We're going to go into the charts. I drew here a little block. That's where I want you guys to focus in at. Okay, my swing low is the lowest point on this little gray area, and my swing high is right here. Okay, I'm gonna put a little oval right where you guys can see my swing high. All right, right here. Okay, cool. So that's my swing high. So now we know that we can draw a retracement. Act as if this was live. Okay, so if you notice, that's a swing, right? So let's throw on our Fibonacci retracements real quick, and let's see where this market stopped at. From here to here. Okay, so one more thing that we're going to do though is we're going to see why the market stopped. Okay, I'm going to show you guys that really fast. The market stopped because what? We were probably at other key levels. Price loves to bounce off of key levels. Okay, so if you notice here, check that out. That's a bounce, right? Consolidation, price moving all over the place, consolidation. And if you go further back on the hourly, you can see more consolidation. But we're going to stick here on the 15-minute. You guys get it. So you see price move down to the 50% level, right to the button. Okay, so if you were to place your stops on that 50% level, you would have been really with almost zero drawdown. You would have had a little bit of some a scare here. But that's why you set profit targets. Don't get afraid. If you notice, price rallied, but then it came right back down to that 50% line. That's why you have your price targets. If you don't have price targets, you're probably going to be scared to get out of this market. But price targets give you the liberty to just say, okay, this is where I want to be in. This is where, if I'm wrong, I want to be out. And if I'm right, this is where I want to get out. That's it. Leave your computer, come back, and see what happened. Okay? So, cool. You see right here that price hit off on the 50% line. Why? Why did it do that? We were oversold. Okay, notice on my stochastics that we're oversold. But not only are we oversold, we have some bullish divergence going on, right? That's extremely important. If you notice here, we have, I'm going to zoom in for you guys just a little bit. And I suggest you guys to full screen this because, it's kind of hard to look at candles when you're just watching kind of from some little screen. So, you notice we have our momentum is really speeding down, isn't it? Look how small these red candles are. Okay, that's an indication in itself. All right, so you see that price movement is slowing down. You're gonna have a high probability chance of that. You're gonna hit off on that 50% line, and it did. It worked out. All right, so now you're in the trade. What's your next job? Okay, your next job is to figure out where to get out. Okay, how do you get out? You're gonna be using those Fibonacci extensions. Okay, so how do you place Fibonacci extensions? It's literally just as easy as placing Fibonacci retracements, right? I'm going to take off everything on this chart real quick. Remove all drawings. Okay, and we're going to pull up our Fibonacci retracement tool because I fixed it so that my retracements and my extensions are all in one tool. You can do that in TOS. So notice here, this was our swing high, okay? This is where we entered into the market right there, right on that hit on that moving average. And this was our swing low, correct? Let's see where we could have got out. So if we draw from here, from this swing high, and we draw from to our swing low, look at what happens, okay? You literally have a sell-off from the 27.2, the 41.1, and the 161.8. All right, look how perfect it adds up. Why does it add up that perfectly? Because people are using Fibonacci extensions. Okay, it's obeyed. People are obeying that metric, this methodology in the market. All right, so what does that mean for you? That means you're gonna have a chance to make money. Don't use something that no one else is using because the market isn't obeying that. You're going against people here. All right, you're basically trying to have an edge. Okay, right now there's an obvious edge in the market because sellers were beat. Okay, sellers were beat off in this market, and who knows what happened on the sell-off? Maybe they took their money and left. Who knows what happened? Doesn't matter. You won in this position. All right. So that's just a quick video on Fibonacci extensions. I didn't go up into a higher time frame. I already did that before I made this video. But if you look on the hourly, you do have a lot more. That's a really nice picture for you here. So remember that 50% level right here on that lower yellow line is where we entered into the market, right? Look at all that consolidation to the left, okay? That gives us a high indication. Not only that, if you notice right on that 50% level, we have a hit on our 121 exponential moving average, all right? That's more movement to the upside. On that same 50% level, look what happens. We have an oversold value in our stochastics, don't we? Do you see all the confluence I just had? That's 7 or 8 different things telling me that the market's going to go up. And that's exactly what happened, right? The market went up. The market did its thing, and I'm out. So I had my targets, I had my profit, I had my entries, and I had my stops. Real quick, I'm going to draw you the risk-reward metrics so you can actually see how powerful Fibonacci extensions can be for your account. Because, I mean, it's one of the most, next to breakouts, Fibonacci extensions are probably one of the best risk rewards you can use. So let's say we entered into the market here. Let's see, where were we at? We entered into the market right here, right? That's right there on that 50% level. Okay, let's say we set our stops on that lower swing, okay? What in this case, the lower swing right here at those wicks happened to be the 61. But again, like I said, you want to set your stops right below the 61. So here you have our stops, right? So right there you have your entry, and right here you have your risk, okay? Now, where do we get out? If you remember, I mean, it took us a while to actually get out of this market because price was just it went crazy, right? It moved all the way up to the 127, the 141, and the 161. It's not going to do that every time. A lot of times you'll see price stop at maybe the 127 or the 141, or sometimes it won't even make it to the 127. What happens when price doesn't make it to your 127 extension? Well, I hope you've been trailing your stops. Okay, when price passes each level, move your stop up. Don't be up 100 pips, but then have your stop loss below where you entered into the market. Keep moving it up as price moves up, especially when you're using Fibonacci's, because I mean that's what you're supposed to do. All right, so if you notice, we had our 127 extension right here. We had our 141 right here. And our 161 was at the top, all the way up there. Okay, so look at that gap, guys. This is your reward. Okay, that huge blue gap right there is your reward. Okay, and that little tiny gap is your risk. I mean, that's amazing. You know how often you need to win to have a profitable month, a profitable year, a profitable account? Not often. You can win 50% of the time and be probably one of the most profitable traders, in the game. All right, so this is our risk reward right here. So, and that's at the 127. All right, I'm not going to even go to the 141 or the 161, the 147 or the 161, or 141 or 161, whatever. Use extensions. They're obeyed in the market. Okay, master where you're going to place your swings. That's something I didn't go over in this video because that's an hour-long video. Where to actually place that swing low to that swing high, but master that aspect of trading. when you're trading on a lower time frame, don't get so caught up in the 50% level is the strongest or the 61% level is the strongest. Whatever level has the most confluence at it, that's where you need to be trading off of, okay? Don't trade on one time frame either, okay? When I took this trade, I was on the hourly and the 15-minute. I didn't go to the 4-hour because I didn't have much to see, and I don't go to 5-minute charts, okay? Usually you're going to be at 3, but this one I could pretty much, have some synergy in whether or not, okay, this is a good market to be into. So use extensions, guys. It's a powerful tool. It's used in Forex. It's used in all of day trading and all trading period. So it's something that can definitely benefit you. If you have any questions about how to use Forex, not how to use Forex, how to trade Forex, if you have any questions about Forex, hit me up. But if you have any questions about Fibonacci extensions, let me know. I mean, I have a lot of time. I can definitely give you some time to learn how to actually use extensions and how to use retracements. And other than that, guys, dominate the market, and a family that stays together
trades together.
Trades together. You did that backwards.
Trades together, stays together.
That's right. Okay. Peace out.